Okay, just share my screen and okay, I think today I would like to start from gold. Sorry, not gold, oil. Okay, let's start from oil. Okay, let me switch off my messy stuff. Okay, now oil. This is daily time frame. Okay, so let's start from oil. Now, for those of you who have seen this before, this orange line over here, this vertical orange line, is the date of, it's about February 2022, a couple years back. Now, this is the date where the Ukraine and Russia situation started 3 years back. Okay, yes, it's almost 3 years already, and it's still very long, protracted situation going on. And I think I mentioned previously as well, when a conflict occurs, something happens to oil, right? So the spike that we have now over here, the couple of months back, is where the Iran and the US situation happened. So if you just zoom out a bit and look at the chart pattern, technically they have very similar behaviors. They all have that spike to the top, spike to the bottom, creating a very nice large range of where oil prices are traveling. So the Ukraine-Russia situation is now happening in this large range. Okay, so the range I'm looking at is the top of this, as well as I think the little gap over here, the top of this. Okay, so this is a large range where it's happening. Now, my buy area for oil, if the war doesn't end, right, or the conflict is still ongoing, is the 70. Sell area is above here. Now, this is a slightly high risk positioning because I don't know whether Trump is going to change his mind. Actually, sorry, I know Trump confirmed will change his mind. I don't know how many times he will do it. All right, so he has done it multiple times over the last few weeks slash month. Right, every time he flops, oil prices flops. On a general point of view, it just means that oil is going to be trading in this large range unless there is 100% confirmed situation change in the Iran situation, right? Which we don't know. He can continue to flip flop over and over again. Oil prices will flip flop over and over again. And this means that oil is now a range trade area, right? We have no more trend. Seasonals is out the window. Speculation is going on. So because of oil prices going up and down, some of the currencies that are affected by the oil prices will follow suit. This to me is the Canadian dollar, the euro, which is highly dependent on oil imports, Japan, which is also highly dependent on oil imports. So the fundamentals for these two currencies, the euro and the yen, is because of the uncertain oil prices, the volatile oil prices. It means that also if oil is expensive, the yen and the euro is going to suffer for it. If oil is cheap, the yen and the euro might improve because of it. So this brings me down to the currency pairs that I'll be looking on next week. Number one is very similar to Lloyd, euro dollar. And like he said, it's a medium short-term trade, not super particularly long. Okay. So if you look at the oil, you look at the euro dollar. Okay, why the euro dollar is because currently, based on the fundamentals, the US dollar is really strong, carried by a few factors. Now, structurally, right, the USD. Okay, let me just pull up trading economics over here. Now, on the statistical data end, if you actually take the US data statistics, okay, now this 2.1, please don't be deceived. Their 2.1 is based on a quarterly read, all right? So actually, you have to divide this figure by 4. It is actually 0.525, okay? So I would say, although it looks super great on this American website, I'm assuming, all right, if you click into it, okay, just to show you guys what data that we're looking at, okay, so the data is annualized. Annualized means it gives 2.25% as an annual data. Now, if we look at the other economies, okay, for example, the euro, or let's use Japan, okay, Japan, okay, this is a QOQ reading. Okay, QOQ reading. So this firstly is the reason why I'm not taking it at face value. I'm dividing it by 4 because actually it's an annualized reading, but they're trying to give you a little bit of perception over here. So this one is actually 0.525. Okay. Now, even at a 0.525 quarterly reading, it still means that US in general, just based on its past quarterly GDPs, is still one of the healthiest across its counterparts. Its counterparts would be the euro, which is currently at 0. Japan, slightly better, 0.5. UK, 0.6. Canada, 0. Okay, and let's go down to Australia. Over here, 0.3, still slightly softer than the US. We go to the Swiss, 0.4, not too bad. And then we go down to New Zealand, which is just a bit underneath Singapore, which is over here. Okay, New Zealand, okay, 0.8. Okay, now this 0.8 here is what interests me because US is 0.525, New Zealand is 0.8. However, the figures that slightly do not work for the benefit of the New Zealand is their high inflation rate at 3.1. Okay, unemployment rate has also increased. So let me show you what it means from this website over here. So you can see unemployment has been tracking upward in the last 2 years. Now it's holding just about 5.4, 5.3, just a slight dip in the last period. All right. So the US obviously is doing really, really well right now because if you compare the statistics across the board, okay, it has one of the highest interest rates at 4.2%. Unemployment is, I would say, still controlled. So if you look at the US unemployment rate over here, recently it has also had a slight improvement, okay, over here. Recently, in the last reading, unemployment actually went down a little bit, giving the US a little bit of a confidence boost as well. Okay, so from May to June, unemployment rate has also improved over here. So this is one of the reasons why I'm still looking at a stronger US, because if you compare the inflation figures, the interest rate figures, unemployment figures across the board, and also GDP is pretty stable, there is no reason why we would perceive the US as weakest compared to the other economies. Now, on that note, what are the economies that are currently suffering right now due to the high oil prices, the volatility in the Iran situation, the volatility in the Ukraine-Russia situation are the European countries, which is the Euro, the UK, and of course, Japan from the Asia side because of its reliance on the high oil import prices. So this brings me down to the currencies that I'm looking at. Okay, one is Euro dollar. So I'm bearish on the Euro, bullish on the dollar. But I'm looking at it on a slightly overview. I do want the Euro to retrace a little bit more towards a 1.16. I don't know if you'll get there because of the flip-flopping of this oil situation, all right? But what I do see from a technical perspective is that we have a bear flag that's already appearing. So we have a bear flag over here. There is a good probability that price might break towards the downside. I don't know, but 1.15 is a psychological level that I'm looking at, okay? If price is unable to come up to if price is unable to come up to my sell zone over here at 1.16, then I guess we will have to settle that 1.15 psychological area, which is very similar to Lloyd's strong resistance structure on his indices as well. Okay, so this is where I'm looking for potential shorts over here for the euro dollar. Now, the other currency I'm looking at is the pound dollar. Okay, also a European adjacent country, kind of still in the euro area. Now, the pound data, it does have high interest rates at this moment, but it also has pretty high inflation and unemployment is not super great as well. So the pound is going through a period of a slight slowing down. Politically it's not super stable as well. And I'm looking at pound dollar shorts from these two areas. So either price resists this area and gives me that short position, which actually did happen last week. It shot up to the next sell area and come down, a technical move. I do want price to break and test below this area before going short. So still a little bit of bumping around over here, but I am looking for potential short pound because the data is not super great as well. And we are reaching towards the second half of the year, which means winter is coming. The energy crisis or the expensive oil prices would impact the euro area countries a lot higher because there's going to be increase in actual consumption of oil itself. So if whoever is producing the energy for heating, during the winter period has not stockpiled enough affordable oil, we are going to see cost of living increase towards the winter months as we go into the winter seasons for euro and for pounds. So basically, we are seeing a change in living expenses when it really matters, because when it's warm, we don't really care about whether or not. I mean, in Singapore, it's so hot, we're on aircon, but it's all year round, right? We're pretty hot all year round. But for them, energy prices really do make a difference when you reach winter, when it's time to kind of survive during the winter months. So that will be interesting to see as we head towards the last half of the year, or as summer starts to end and we go into winter and temperatures start to drop. Will this continued oil price start to affect? And that is what I'm actually looking for. Short euro, short pound, especially towards the later half of the year. If this oil situation is still hanging out, it will really help to push that short positions for euro and pound. Now, the other currency pair I'm looking for is a Kiwi dollar. As you can see, most of it I paired against the dollar because the dollar is really doing really well. Now, Kiwi has increased temporarily so far, but I do feel it's more of a technical increase because the Kiwi data has been soft for a very long time. We are actually on a daily time frame trading now in the middle of the zone, the range. So if I draw a line at the bottom over here, we are actually right smack in the middle of just above the midline of this entire range. I prefer looking for short positions when price comes to the 0.60 level, because I do not believe that the Kiwi is strong enough to break above to reach its previous high point. So if I really zoom out the entire Kiwi dollar market structure, okay, there is no fundamental reason based on fundamental data for the Kiwi to come back into these areas because the data is just too weak. So instead, what we can do on a fundamental basis is to find those resistance support levels where we can start to position shorts based on a technical move. So this is the range that we are looking at. So now it's crossed back above the 50% level. I do want it to hit a little bit more to up here. This is my so-called sell area for actual better quality shorts. But of course, on a shorter time frame, 4 hour, 1 hour, if there are interim shorts you can take in this area, it is also possible. But do kind of note that, you know, Kiwi dollar is trading in this large range just really because of where the data is going at. Now, dollar yen is the next interesting part. There is a divergence in the US dollar 10-year yields over here. As you can see, traditionally, the US 10-year yields lead the dollar yen in terms of direction. But recently, because of the oil situation, because of the new political changes in Japan, the divergence has now changed a little bit. So this is the 1 hour time frame. It'll be a lot clearer on the daily. Let me shift to the daily. Okay. Now on the daily time frame, okay, this is what we are looking at. Okay, this is the daily time frame. Okay. Now for the daily time frame, okay, if I line it up a little bit. Now you can see here that the yields, the US dollar 10-year yields has been increasing. Okay. The dollar yen has been going up. There is a divergence over here. Okay, prices are starting to come down. I'm expecting the dollar yen to follow if we are in normal zone. But unfortunately, we are now in the region of abnormality, meaning that nothing is really quite normal anymore. So if you think that your dollar yen is just going to pump right down, I would like to say, please hold your horses. Okay, the dollar yen is not going to immediately tank based off a technical reason, because there are two things we are looking at now in the dollar yen market. Number one, we are looking to see if there will be Japan intervention, okay, because of the policies that are going on right now. So if I zoom in on the dollar yen, okay, yes, although I'm looking for shorts on the dollar yen, I'm leaning towards a little bit in Lloyd's camp. Before it goes short, it might go long first, because there's only so much capital and so much money that Japan has to so-called intervene in the market. So I do suspect that what's going to happen from a technical perspective and a strategic perspective from the Bank of Japan is they might allow the dollar yen to spike up first and catch the traders out over here in an institutional move. Because if you look at it this way, who is going to short dollar yen? Now, everybody wants to short dollar yen because they think the Japanese government will intervene. But if I was the Japanese government, I would say, hey, wait a minute. If I need to intervene, I need to do it smartly and wisely, which they're really good at, which means I'm going to make sure I wipe out all the short sellers over here and only enter later on when they have better positioning or when there's a little bit more clarity with the Iran situation. All right, so two things will happen in the next couple of weeks. Either nothing is going to change, Donald Trump is still going to be fighting Iran, we are going to see the dollar yen meander in this level. It might come back to the 162 level, but this is going to be pretty solid for now. The moment Donald Trump says that, okay, the war is ending, etc., etc., and dollar is going to find some weakness, I'm pretty sure from a institutional level, price would spike down, spike up, and then finally go down this way. So I'm waiting for this, which means I want this to be broken first, wait for confirmations at the next level before finding the way down. So what I'm looking for is trying to see whether or not the Bank of Japan will intervene. All right, which means that you have to kind of be really, really patient and wait for the move to come first. So we have to, number one, wait for Donald Trump to finally make up his mind, okay, which will push the market one way. Then wait for people to start feeling it, panicking it, and move the other way for the manipulation to come in, and then for the Japanese government to finally intervene. Okay, I'm drawing a very large arrows over here. But basically, dollar yen, am I going to be trading it now? Unfortunately, I'm not as brave as Lloyd. No. I'm going to wait for my 1, 2, 3, which is first, confirmation of what Donald Trump is going to do. Second, wait for the Japan intervention. Then only I'm going to enter in. So I am afraid I'm going to be waiting for months. If I'm really, really unlucky, maybe I got to wait until Donald Trump changes term, right? Okay, that's a joke, all right? Okay, so this is all I have for me. The next regular currency pair that I love and looking at is still the Euro Sing. If you live in Singapore, you will know Sing dollar is one of the powerhouses right now because the economy is doing really well. 5% year-on-year GDP, followed by a 6.3% print in Q1. Okay, look at your Straits Times. Okay, MAS manages the policy through the exchange rate NER corridor instead of interest rates, and it's highly supported by trade inflows, and we have a very, very strong current account. So structurally, Sing dollar is very strong. The pair I'm going to be trading it is together with the euro. Why euro is because the dollar is too wonky for me. Okay, it's too much instability there. The euro is slightly cleaner in terms of price action, in terms of movement. So I do prefer the euro sing to the dollar sing because the dollar is just going a bit crazy for me. All right. So sell zone is over here at the 1.479 areas. So this is really, where there's a lot of resistance towards the downside. Price is very, very rangy, similar to the dollar sing when it does move. So I expect price to be trading in this medium range for the medium term. So sells over here. And unfortunately, I'm not buying the euro at this time. I'm only looking for sell positions. So sell positions over here. That's it for me. All right, that's all I have this week. Anything else to add for Lloyd?
No, I'm good. Thank you, Alexis.
All right, cheers everyone. Trade safe. See you guys next week, I think.